Yes, owning nothing can actually make you richer. Sounds crazy, I know. But it's happening. Right now. Platforms like Red Swan are letting people invest in pieces of commercial properties. That's amounted to $4 billion so far. And Masterworks? They've made it possible to own a fraction of a rare painting, tapping into a $2 billion market for tokenized art. This is called tokenization, and it's changing the rules of wealth building. By 2030, it's projected to grow into a $16 trillion market. That's 10% of the global economy. Some experts, like Jeremy Allaire, are calling it revolutionary. Others, like Niall Ferguson, warn it could open the doors to massive scams without proper regulations. But how did we get here? What's fueling all this? And most importantly, what does it mean for you and me and the average Joe or Alex? To figure that out, we need to rewind and look at how ownership itself has evolved. So what's ownership? Well, it's the thing we've been conditioned to chase since. Forever. The idea that the more you own, like land and homes and businesses, the better off you are. But what if I told you that, in this day and age, owning less or even nothing can actually make you richer? It sounds wild, but this is a new financial trend, and to understand it, we need to rewind and see how we got here. Okay, it's the 20th century, and the concept of fractional ownership is shaking up the old rules. First, stocks arrived on the scene. Suddenly, you didn't need to own an entire company to make money. You could own a tiny piece, a share, and you still get a slice of the profits. But it didn't stop there. Next up, REITs, or real estate investment trusts. Think of these as group projects for investing in big stuff, like malls or office towers. Everyone chips in, and everyone gets a cut of the earnings. It was a game changer, but here's the thing. These opportunities weren't for the average Joes. They were meant for the wealthy. Fast forward to 2009. Blockchain enters the picture, and everything changes. Now, we're not just talking about Bitcoin here. Blockchain introduced the concept of tokenization, which is like splitting something valuable, like a building or a painting or even a song, into tiny pieces called tokens. These tokens can be traded online, and suddenly, anyone with a smartphone could own a fraction of something big. But how did we get from stocks and REITs to tokenization? Let's break it down. In 2012, the US Congress passed the Jumpstart Our Business Startups Act, or the JOBS Act. It was signed by President Obama. The government basically saw the financial crisis wrecking small businesses and said, let's fix this. They wanted to make it easier for regular people to invest in businesses through crowdfunding. It wasn't just for Wall Street anymore. Next came ICOs, or initial coin offerings. The period between 2017 and 2018 is commonly referred to as the ICO boom, because blockchain startups raise massive amounts of capital by offering digital tokens to investors. Imagine companies raising money by selling digital tokens instead of stock. It was like a gold rush. Some startups hit the jackpot. Others, well, not so much. It was chaotic, but it proved one thing. Blockchain could completely change how we fund and own things. By the 2020s, decentralized finance, or DeFi, and non-fungible tokens, or NFTs, were everywhere. Decentralized finance basically turned your phone into a bank. You could lend and borrow and trade directly with others. And NFTs? They made it possible to own unique digital items, like art or collectibles on the blockchains. Both of these tools exploded in popularity, making it easier than ever to trade and own small pieces of valuable stuff. And that brings us to today. We've moved from owning whole things to owning fractions to even accessing assets without full ownership. This shift is reshaping industries. Like real estate or art or music, you name it. So, we've seen how ownership has evolved. But here's the thing. Revolutions like this don't happen on their own. They're driven by people, like visionaries and skeptics, and everyone caught in between. So who's leading this charge? What are they fighting for? And what's standing in their way? To better understand this, let's talk about Alex. Alex could be you, or me, or anyone trying to figure out how to build wealth in a world that doesn't play by the old rules anymore. Alex grew up hearing the same thing we all did. Work hard and save up and buy a house, and you're set for life. But now, the cost of everything is through the roof, and those old goals feel impossible. So Alex starts asking if there is a better way. That's when Alex comes upon the concept of tokenization. You can own fractions of things worth millions for as little as a few bucks. Why? So that you can get paid interest on them? Really? Like most of us, Alex wants financial freedom. We don't want to sit on the sidelines anymore, watching the rich get richer. Tokenization gives Alex a shot at the kind of opportunities that used to be out of reach. Investments that can grow wealth without requiring a fortune upfront. So Alex is hopeful once again. This idea promises that if we are disciplined and hardworking, we can actually build real wealth over time. Like in the old days. But Alex isn't stupid. There are several problems here. What if there are scams? What if those platforms get bankrupted by traditional banks and Alex loses everything? And what would Alex's friends and parents say about pouring your money into some digital nonsense? Sure, opening an app and seeing a bunch of data about what you own and how much its price has increased is cool, but actually owning the thing is a different story. So what's the best way? Or if we decide to stick to the old ways, we risk falling behind. Rising costs and stagnant savings could leave us trapped, watching the wealth gap get wider and wider. Alex knows this, but it's not that simple. And here is where it gets even more exciting. It's not just Alex with something to lose. Traditional finance risks losing its monopoly on wealth creation as tokenization levels the playing field. Platforms like Red Swan could bypass banks, letting individuals invest directly in assets like real estate, eliminating the need for traditional financing. Skeptics will miss out on a financial revolution while stuck clinging to outdated systems. They will stick to savings accounts and miss out on opportunities to invest in high-growth areas like tokenized real estate or art. Back to Alex. This story is about more than just personal finances. It's part of a much bigger shift. The story shows us the battles being fought. Battles between old systems, clinging to control, and a new way of thinking about wealth. But is this shift really as groundbreaking as it seems? What do the numbers say? Are experts convinced? And how do everyday people fit into all this? To answer that, we need to dive into the data, the opinions, and the possibilities for the future. Because whether this revolution succeeds or fails could change everything. So what does the data say? The numbers are big, really big. A 2023 Deloitte report says the tokenized assets market could grow to $16 trillion by 2030. That's 10% of the world's economy. Real estate is already leading this revolution. Platforms like Red Swan CRE have tokenized $4 billion worth of properties, letting people invest in pieces of high-value buildings. And it's not just about real estate. Tokenized art and collectibles are booming too. In 2022, Markets and Markets reported a $2 billion market, fueled by platforms like Masterworks and Rarible. Boston Consulting Group goes even further, estimating tokenization could unlock $68 trillion in illiquid assets by 2030. Things like private equity, luxury goods, and fine wine. That's not a small change. Next are the experts. What do they say? Well, they are buzzing about tokenization. Jeremy Allaire, CEO of Circle, calls it a global market unlock, making it easier for everyday people to access investments that were once out of reach. Even Nouriel Roubini. Yes, the guy who's usually a blockchain skeptic admits it's great for liquidity. Think about it. You could trade a slice of a building or a painting as easily as stocks. But not everyone is celebrating. Financial historian Niall Ferguson warns that without proper rules, tokenized markets could become a magnet for scams. And Christine Lagarde, president of the European Central Bank, says regulation is crucial to balance innovation with consumer protection. Now let's get more personal. What do average people think? Let's talk about you and me. Everyday people trying to figure this out. A 2022 Chainalysis survey found 40% of millennials and Gen Z investors are excited about tokenized assets. Why? Because it lets them access investments like real estate and art that used to feel impossible. But it's not all sunshine. The same survey found 60% of people are worried about scams or just don't understand how tokenization works. A 2023 YouGov poll revealed that younger investors are starting to trust tokenization more than traditional savings accounts, with 35% saying they're drawn by the chance for higher returns. With all this in mind, there's only one question left to answer. So what does this all mean for the future? We've got three possible scenarios: a best case, a worst case, and a most likely case scenario. In the best case scenario, tokenization goes mainstream. Platforms are secure, regulations are in place, and everyone from small investors to big players has access to high-value assets. PwC predicts this could help close the wealth gap and make investing fairer. In the worst-case scenario, it becomes a free-for-all. Without proper oversight, scams take over, and only the wealthy benefit. The Financial Action Task Force warned in 2023 that tokenized markets could become a haven for fraud if regulators don't act fast. And the most probable scenario is somewhere in the middle. McKinsey's 2023 study says tokenization will grow steadily, especially in real estate and collectibles. Regulations will take time, but as trust builds, more people will join in. Early adopters will likely benefit the most. So the data shows its massive potential. Experts see both opportunities and risks, and younger generations are cautiously optimistic. The question is this: will this revolution deliver on its promise, or will it fall into the same traps as traditional systems? But while everyone is speculating on these tokenized assets, the largest asset manager in the world, BlackRock, is trying to take over the tokenized asset industry. They manage a portfolio of over $10 trillion and have set aside a significant budget for the tokenization trend. If you want to find out more, watch this piece on the revolution in the real estate market. Thanks for watching, guys, and stay informed.